Hey, what's up guys? John here. A crisis is forming inside of the rental market for landlords nationwide as they see rents continuing to fall month after month.
Rent prices are on the verge of going negative.
Apartment rents have been cooling off sharply for several months now.
Insurance and taxes soaring.
More and more homeowners are abandoning home insurance because of skyrocketing costs.
And Jerome Powell making statements like this. He made this morning. Fed Chair Powell calls talks of cutting rates premature and says more hikes could happen. Now, what is going to happen next is going to be the greatest rug pull in the real estate market we've ever seen. I think this opportunity that we're going to be walking into in 2024 and 2025 is going to be a greater opportunity than what we saw in 2010 and 2011 after the great financial crisis. And in this video, I'm going to show you exactly what's going on. If you're a renter, I'm going to show you exactly what you should be doing right now to get your rent reduced. And if you want to invest in real estate, I'm going to show you exactly what you should be doing to position yourself for this massive wealth transfer. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's happening in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, right now, landlords are offering tenants incentives. We haven't seen that since 2020. Remember that? All the closures. Landlords started panicking in March and April of 2020, offering first month free, last month free. They were offering a lot of different bonuses to try to attract tenants. Well, now, 5 hours ago, more Dallas landlords offering free rent to entice new tenants. 15 hours ago, Silicon Valley landlords offering incentives to lure tenants. 16 hours ago, new study shows an uptick in landlords offering deals for renters across the Bay Area. 16 hours ago, new study shows an uptake of landlords offering deals, also Bay Area. You start to look at what's happening right here. The rental market is softening so fast in some pockets of the country, landlords have no choice but to offer concessions. Why? Why are they doing this? Well, a couple things are happening right now. This move out are expensive. This is number one. There's a big reason why landlords and operators are laser focused on retaining tenants. It's gotten really expensive to turn a unit, materials and labor, yes, but also more turn due to surge in supply, right? So you're seeing a situation where if a landlord loses a tenant, they don't just lose a month's rent, not the $1,500, $1,800 that, in most markets they command for a one bedroom, but it's going to be the turnover. It's going to be the repairs, the maintenance. It's going to be showing the unit, all the costs that's going to go into it. But one of the really big caveats here is that a lot of landlords have to refinance their debt in the next year or two. And that downturn, that revenue that's going to continue to fall, if they can't re-rent it for the same rental rate or more, it's going to make things even harder when it comes time to refinancing these properties. So it's a big problem, especially with 1.1 million apartments currently under construction, which is look at this. According to the commercial real estate tracker CoStar, a pace not seen since the 1970s. Now, they sold the American people on a story that we're in the greatest housing shortage ever. And you can't build housing units fast enough. Rents are continuing to soar and nothing's going to change that. And it's a great time to be a real estate investor. A lot of people over leveraging themselves. A lot of people didn't, right? But a lot of people are going to get hurt. And that's what's ultimately going to happen, especially real estate developers. A 50-year high, right? 50-year high. Here's a really good example of this. So troubling signs continue to emerge for commercial real estate in the U.S. This time, it's two apartment developers in a market that's been on fire for the last decade. An unfurnished high-profile apartment development in Tacoma and newly built apartment complex in Kent, Madison Plaza, are headed to auction. Tacoma Tracks is a 115-unit project that broke ground in January 2022, while Madison Plaza is a 157-unit complex that opened in September 2022. The two properties facing auction are under the same construction loan, and ground lease agreement was part of the developer's financing vehicle. The properties entered receivership in March. According to the Tacoma New Tribune article, the developer's CEO blamed post-pandemic economic issues, aka interest rates, insurance, and taxes continuing to rise. Labor shortages, right? Exactly which was mentioned here. And you can't make this stuff up. Cost escalations, inflation, interest rates, making it harder for projects to pencil. This same article highlights the Kidder Matthews executive vice president who stated the following in the report: Once a darling investment market, transaction volume in Pierce County is a ghost of its former self. As such, we expect sales volume declines nearly 75% compared to historic averages. Due to a significant oversupply of new apartments in downtown Tacoma, pricing is softening, especially for newer vintage buildings where fewer investors are in the market and stepping to the plate. According to the trustee attorney, there's no interested bidders for the assets outside of the lender at the moment. Well, if you're a renter right now and you have a lease that's expiring, let's say December 15th, January 15th, February 1st, it might be a good time to tell the landlord, hey, I might be interested in signing for another 12 months, but maybe we do 1 month free. Maybe we do on the renewal that first month for free. Or we do the last month for free. We do something. Or we reduce the rent. More than likely, they're going to want to give you a month for free to retain you. And the reason for it is because if they reduce the rent, it's going to impact the net operating income of that building, making it harder for them to get their refinance. And that's going to be an issue for a lot of these landlords. But giving you a month free, they might be able to work that in. And it would make a lot of sense for them to do that, especially if rents are continuing to fall 2, 3, 4%. And in a lot of markets, it's a lot more than that. Here's a really good example of this. Look at what's going on in Oakland. In Oakland, there's 25,000 units, right? All told, this will result in housing stock increase over 25,000 units by 2031. That translates to 25% increase in available housing. What will that do to rents? What would that do to rents? If you have a 25% increase in housing, what that's going to do to rents is rents are going to fall dramatically. That's what that's going to do to rents. This is an issue. Austin, Texas is a really good example. 120,000 apartments in the pipeline. Austin, Texas, for context, has 433,000 total housing units. So this is not apartments exclusively. There's a lot of single-family homes, a lot of owner-occupied properties, 433,000 units. Now let's pretend, for example, they're all rentals. They're all rentals, which they're not. But just for context, this would be an increase of a supply of 27%, right? So it's going to be far greater than that. That's going to be a big problem for a lot of landlords that have rentals in Austin. It's going to be a really, really big problem for them. Look at Boise, Idaho. Boise's median rent fell 0.4% in November to $1,281, and it's down 3.3% in the past 12 months. Most people that are buying in Boise, they were buying at a 5% interest or 5% cap rate, right? They're buying at a 5-6% return maximum. And so when you have rents fall by 3.5% or 3.3% and insurance and taxes rising, these landlords are underwater, a lot of them, right? They're in really, really big trouble. Rents continue falling amid recession concerns. But I share this information because I think it's going to be an incredible time to be a landlord if you understand where this is going to go. So look at what's going on here. You have a situation where you're going to start to see a lot of people looking at rent differently. They're going to be looking at the cost of living, and they're going to say, you know what? Do I really need to go drop $1,800, $2,000, $2,500? No. Right? They're going to try to save money. They're going to want to feed themselves first. So what are they going to do? They're going to be moving back with their parents more and more and more. They're going to start to reduce their expenses, bringing in roommates. They're going to start to downsize, go from that nice luxury one bedroom to maybe a B class area or a C neighborhood, getting a studio. They're going to start to do this. And I mean, right now it's already happening. About 1 in 4 millennials are living with their parents currently, right? According to a survey of 1,200 people. Now, look at this. More office building landlords are giving properties back to lenders. So you're going to start to see this across office. You're going to start seeing it across multifamily. You're going to start seeing this across all commercial properties in a lot of areas, right? In a lot of areas, especially when you factor in that $1.5 trillion in debt has to be refinanced over the next 18 months. And from now until 2027, $2.7 trillion. So 1 out of 10 commercial properties throughout America has to go back to the lender to get a new loan. A lot of these properties are not going to be able to get that new loan because what's happening, banks are tightening up their lending restrictions. So what do I think is going to happen? I think right now, if you are a renter and you're thinking of, okay, what do I do? I personally would make sure that you're in a really, really good spot financially. Out of high interest rate consumer credit card debt, you have a good credit score, you have a stable job, stable income. You ask yourself, if you're a bank, would you want to lend you money? If the answer is yes, 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 then I would start to understand where you want to invest. What market do you want to invest in, right? Then at that point, I would start looking at products like this. If you're thinking about buying your first property, you do not want to buy a single family home. You do not want to buy that. And the reason for it is because you're committing yourself to an expense. If you were to buy, let's say, a triplex or a fourplex, and you were to take advantage of this new Fannie Mae product, which is 5% down, Maybe you buy, let's say, a $400,000 property or $450,000 property. You go put 20 or 25 grand down, maybe 30 grand down, including closing costs, right? If you don't have the money now, but maybe you can reduce a lower rental rate, put yourself in a place where you can save up money for a year, connect all the, dot your I's, cross your T's, get everything squared away over 2024, and put yourself into a position to where you can go buy one of these properties. You can live in one of these units, you can collect rent on the adjacent units, put yourself in a position to where, you're going to be isolated from a lot of, these headwinds. I personally think what we're going to start to see a trend with tenants is tenants are going to want to leave these massive, prison-like units, like these massive complexes. They're going to want to go to, these nice little triplexes, nice fourplex, where they have a little front yard, little backyard, small community, where it's, it feels like a home. I think we're going to start seeing a lot more tenants demand that, and they would rather spend more to have that type of accommodation than to live here to have, a doorman and a pool and, spend $2,500 or $3,000. I don't think people are going to want that. I think people are going to want to go and move into those, those duplexes, triplexes, and fourplexes more and more and more over the year or two to come. I think we're walking into a massive rug pull in the rental market, and this is going to push a lot of landlords out of the business. And I think we're going to start to see, if you look at who owns these duplexes, triplexes, and fourplexes, they're predominantly mom and pop investors, small business owners, and they're in a very, very challenging position right now. What are you going to have? You're going to have a situation of distress, most likely forming, where these people are going to be forced to sell a lot of these assets. So if you're in a position where you can go buy one of these great deals, live in one unit, collect rent from the adjacent units, you're going to put yourself in a really, really strong spot financially. Because what's ultimately going to happen, the lender's going to look at the amount of cash flow coming in from those adjacent units, the net income from these units. They're going to apply it to your income. It's going to be easier for you to qualify for these properties. So this is a really, really good first step for a lot of people that are looking to get out of renting and to buy their first deal. I think we're going to see a once-in-a-lifetime opportunity coming for those new investors. What do you think about this entire situation? Drop it below. Let's have a conversation about it. If you'd like to fix your credit to position yourself for the greatest real estate investing opportunity in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description as well as video. Schedule a free strategy session. Catch you in the next video.